Okay, good day everybody. Trust you all doing fine. Ayo is my name. So I'm doing this video just to respond to a lot of messages I've been receiving with respect to scaling through the Profem account. A lot of guys have been sending me messages that how do we scale through, how do we pass a Profem account, how do we do this, how do we do that. So this video is just to address that once and for all, and we'll be taking the MFF as a case study for today. I'll still be doing other reviews. Excuse me, I'll still be doing other reviews, but this video is dedicated to do a kind of explicit review of MFF, what it's all about, and I'll be giving you few tips on how to scale through. So this video is basically to address two issues. Number one is going to be a kind of an explicit overview of MFF, that's my Forex fund, and then I'll be giving you few tips on how to scale through, how to pass a Profem account. So let's just go straight to the business of the day. Let's go to my Forex funds. My Forex fund. So basically, MFF offers three types of accounts. We have the rapid accounts, we have the evaluation accounts, and we have the accelerated accounts. Let me repeat that again. We have the rapid accounts, we have the evaluation accounts, and we have the accelerated accounts. However, based on my experience and conversations with a lot of guys trading the Profem account, I've come to realize that evaluation is the best. Yes, evaluation is the best. In fact, I know a lot of traders taking the rapid and accelerated that at the end of the day, they come back, they forfeit the account and come back to take the evaluation account. Probably one of the reasons why they do that is because the profit split of evaluation cannot be compared with the profit split of rapid and cannot be compared to the profit split of accelerated. It cannot. So another thing that evaluation does is that it trains you, it builds you up, it helps you get acclimatized to a particular way of trading that helps you to be successful even when you are given a live account. So you get used to the trading construct already, such that when you are given a live account, the management skill to do that, it would have been built while passing through the evaluation stage. So you don't just pay, and of course the evaluation is cheaper compared to the rapid and accelerated. So most people prefer to go for the acceleration, to go for the evaluation instead of going for the acceleration and the rapid. So let's just go straight to, and because of all these reasons that I just mentioned, we'll be, taking a look at what the rapid is all, what the evaluation is all about. What the evaluation is all about. So evaluation, our evaluation program is a two-step process. So this two-step simply means two stages. You have the stage one, and then you have the stage two. The stage one, and then the stage two. So it's a two-step process where a potential funded trader can prove their Forex, CFD, or commodity trading. So you can trade Forex, you can trade your CFD, you can trade your commodities using the Profem account. So like our repeat accounts, evaluation trading account sizes ranges from $10,000 to $200,000. In fact, now another one has been added, the $300,000. So you can trade it $300,000 using the evaluation account with a profit split payout occurring once in a month. Once in a month on the first month. So when you are taking, when you pass the two stages and you enter the live account, the first payout comes only after a month of your first day of trading the live account. So for example, if you are given a live account and you place your first trade on the 1st of October, you can only withdraw from that account on the 1st of November. You have to wait for 30 days to get that done. However, after the 30 days, you can now go ahead to withdraw bi-weekly. You can go ahead to withdraw bi-weekly from that account. Another thing about this evaluation account is that you can have up to $600,000 as your capital in your evaluation account, but only 300K per trading account. But there is a condition to this. Now, you can merge two accounts together. What do I mean by that? If you pass a $300,000 account, you pass the phase one, you pass the phase two, you get funded, you withdraw your first month, you can take another evaluation account, maybe 300,000. You can take it, pass it. When you pass the account and you get funded, if you are given a live account, you can request that the two accounts, the two funded live accounts should be merged together. You can request that the two accounts should be merged together, and then you can trade the two accounts from one MT5 account. Yeah, from one MT5 account. So through the MFF evaluation trading account process, they hope to identify serious forex prop firm traders who display trading skills required to be successful with a prop firm, with a forex prop firm. Stay consistent, accurate, and maintain proper trading risk management skills, and we will reward you. So what they are looking for is not just your expert level of expertise. What they are looking for is that you display high level of consistency. That's why if you take a prop firm account today and you pass the evaluation stage, you pass the first stage today, you have to trade every day for 10 days to get to stage 2. It's because they want to see consistency. They want to be sure that it's not just luck. They want to be sure that you didn't just stumble into the results. They want to be sure that you really know what you're doing. You want to be sure that you understand what you're doing. So you have to trade that account for 10 days before you are given another account, before you move to stage 2, I mean to say. So they are looking for consistent, profitable traders. They are looking for accurate and people that maintain proper trading risk management skills. So what they reward is not just your skill alone. They reward proper consistency. They reward proper risk management skill. So prove your worth and jump to a funded account in as little as 10 days. So even if you meet up with the target in your day one, you will still have to wait for 10 days for you to get your account. You will still have to wait for 10 days to get your account. So let's jump to the rules. The rules says, number one, 5% daily drawdown. You must not have a 5% daily drawdown based on your balance or equity on your forex trading account within a 24-hour period starting at 5 p.m. EST. What they are trying to say is that your daily losses on that account must not be more than 5% of your capital for that day. So, for example, if you are trading a prop firm account, you are giving $200,000 today, and you started trading today with $200,000, your losses must not be less than 5% of that $200,000. So at the end of today, for that account to survive today, the account must not be less than minus 5% of that $200,000. So what is the 5% of 20,000? Let's check. 5% of $200,000 is what? $10,000. So for that day, before the end of that day, the account must not be less than $190,000. Whatever takes the account to $189,900 means the account will be taken from you. The account will be suspended. It simply means you have violated the rules. The daily drawdown for that day has been violated. So, for example, if you are giving a $200,000 account and maybe you move the account to maybe 210 or 220 or 230, so you started today with $230,000. in your Forex account. By the end of today, you must not lose more than $11,500. That's 5% of your $230. That's the amount you are starting today with is $230. You must not lose more than $11,500 from that $230. Whatever makes you lose more than that means the account will be suspended and collected from you, to be withdrawn from you, and you will lose the account automatically. So that is what rule number 1 means. Rule number 2, 12% overall drawdown. Your Forex trading account must not go down by 12%, realized or unrealized, to balance or equity. What this means, most people don't understand this. This 12% is your overall drawdown. That is your consistent losses. The total of it must not be less than 12% of the account you are given, not your account for the day, the account you are giving. So if you are giving a $200,000 account, your 12% is based on the account you are giving, the $200,000 you are giving. So if you are giving $200,000, the summation of your losses must not be more than $24,000. Whatever makes you lose $24,000 of that account, not in a day now, it can be in a week, it can be 2 weeks, it can be 3 weeks, it can be 4 weeks. Whatever makes you lose $24,000 means the account will be suspended and withdrawn from you. So you lose the account automatically. Excuse me. You lose the account automatically. That's simply what that means. So the third rule says 8% profit target for phase 1. Like I said the other time, that it is divided into 2. We have the stage 1 and the stage 2, the phase 1 and the phase 2. For the phase 1, for you to pass the phase 1, you must make 8% of that phase 1 within a 30-day calendar period. So you need to reach the profit target of 8% without breaching any of the other rules within 30 days. And your time starts counting the moment you place your first trade. That's when your time starts counting. So if you are giving a $200,000 account and you are able to make 8% of this account within 30 days, so you must make $16,000 within 30 days. If you make a $16,000 from this $200,000 that you've been given, you will be passed to phase 2. And that takes us to the fourth rule, which says 5% of profit target for phase 2. So after making your 8% in phase 1 and you've passed to phase 2, you must make 5% of your capital. That's 5% of your 200,000. Remember, 200,000 is our case study. So you must make 5% of your 200,000. That's $10,000 within 60 calendar days, not 30, 60. So it says if you successfully complete a phase 1, you will need to start on phase 2, where you are required to reach a profit target of 5% without breaching any of the other rules within a 60-day calendar period. That's quite amazing. So if you can try to make 8% within 30 days, nothing stops you from making 5% within 60 days. Guys, nothing stops you from making 5% within 60 days. 60 days is 8 good weeks. 8 good weeks, guys. And this takes us to the fifth rule, which says 5 trading day minimum, meaning you must trade a minimum of 5 trading days to pass the prop-feb account. This shows us your ability to be patient and your Forex trading habits, enabling us to profile your skies and skills. So most people think, okay, your profit is the only thing they look out for when you are trading a prop-feb account. No, they check your trading style, they check your trading habits, they check your trading skills. So even if you violate any of the rules and you Send them a mail. For example, if you don't meet up with your target at the end of the period and you are not in drawdown, and you send them a mail, one of the things they will use to assess whether you um you whether they should give you an extension is that they will check your trading style, they will check your trading habits. Do you have a culture of trading? Because trading is not just a skill, it's a culture. Do you have the culture that is needed to be a profitable trader? So they go back to your track record and see, okay, this guy, he has a good trading habit. Maybe market is just doing anyhow. Let's extend, let's give him 2 weeks more. At least I know of someone that was given 2 weeks 3 times. Yes, 2 weeks 3 good times. Why? Because he had a good trading habit, he had a good trading culture, and he was able to, get a funded account. So the 6 says no trading restriction. You can trade your lot size, you can trade your way, you can trade your time. The only thing you can't trade is anything that is any asset that is not listed in the MFF MT5. That's the only thing you cannot trade. As long as the asset is listed in MFF app, you will be able to trade it. So let's go deeper. Okay, let's see the rule 2. Okay, we've talked about the 8% in 30 days and 5% in 60 days. We've talked about that. I've talked about your trading behavior. I've talked about the trading instruments, how that you are allowed to trade anything. Then the expert advisors and robot usage. We allow robots trading on our account. We no longer require you to send us your source code unless there is suspicion of the following, maybe scalping, arbitrage, and any of that. So you can trade your robots. You can connect your robots to your trading account, which personally, I don't advise people to make use of robots anyway. Now let's go to the profit split. The most So for the first month, if you are able to move from your phase 1 down to phase 2, and you're able to pass your phase 2 and given a live account, your first month, the profit split will be 75%. So whatever you make in addition to your capital, so if you are given a $20,000 account and you're able to make $20,000 in a month, you will be given 75% of the $20,000. It will be paid into your account. That's for the first month. Now, if you are able to transcend to the second month, it won't be 75. You'll be paid 80% while they take 20%. Now, if you're able to transfer to the third month, you will be paid 85% of your profits while they take 15%. Makes a lot of sense. Makes what? A lot of sense. The profit split is amazing. I mean, it's amazing. What they just need is your consistency. What they need is your what? Consistency. Now, let me talk about a few tips that can help you to trade a Profem account. You scale through the phase 1 and phase 2 successfully, and then you get your funded account. Number 1, please listen to this very carefully. It's one of the reasons why I'm taking my time to do this video. Number 1, I advise people, and it has worked for people. It has worked for me. It has worked for a lot of persons. Do not risk more than 0.5% of your account. It sounds crazy. It sounds as if you are underutilizing your equity, but it's the best, guys. It's the very best. Do not risk, especially if you are just starting, do not risk more than 0.5% of your account. If you are risking 0.5% of your account, you have 24 times to hit stop loss consecutively for you to lose that profit account. Because irrespective of the amount of accounts you buy or you are giving, the only thing you are giving from that big amount of accounts you are trading is 12%. Because remember, if you have your overall drawdown of 12%, it will be taken from you. So the only thing you have access to, even if it's $200,000, if it's $300,000, if it's $600,000, the only thing you have access to is 12% of that account. So 12% of the account is what you should work with, not the whole accounts that you are given. And if you are risking just 0.5% of your account for every trade you take, that means you have to lose 24 times to get that account suspended. You have to lose consecutively 24 times to get that account suspended. And it simply means that you have to lose 10 times consecutively to violate your daily drawdown. Meaning, today now, if you wake up, for you to violate your daily drawdown for today, you have to hit stop loss 10 times, losing minus 0.5% of your account from your equity for you to violate your daily drawdown. Now, who takes 10 trades in a day? I mean, some people do it, but to me, it sounds unreasonable. To me, it sounds as a high level of irresponsibility. How can you be taking 10 trades back to back and you are eating losses and you are still taking 10 trades just in a day? And it is when you do this that you lose 5% of your account. And when you continue to do this, you lose 24% of your account. You lose 12% of your account when you hit stop loss 24 times consecutively. So the understanding of this gives you, it puts a level of responsibility in you that, okay, boy, risk management is highly necessary and important in this game. And because it is important, I'm not risking more than 0.5% of my account for every trade I take. So even if I hit stop loss 4 times, I know I'm just losing 2% of that account in a day if I hit stop loss 4 times. Risk management. When you do this, it gives you a level of confidence. It helps your mental states. Your trading psychology becomes better. It becomes better. Number 2, it is important for you to focus on just one asset class, especially if you are still in the evaluation stage. Focus on one asset. If you are trading USD pairs, focus on USD pairs. If you are trading yen pairs, focus on yen pairs. If you are trading card pairs, focus on card pairs. Focus on one asset class. And you must always use the base assets of that asset class to judge the directional bias of whatever asset you want to take. So what am I trying to say? If you are trading a USD pair, you know you are focusing on just SZD USD or AUD USD or Euro USD or GBP USD. So your base asset for these 4 assets is your DXY. And of course, you know that if you are seeing a buy setup in DXY, you should be looking out for a sell setup in USD pairs in either GU or EU or AU or NU. Now, having this understanding, okay, you know DXY is showing you a buy setup. And then you are coming to these other assets, the NU, the AU, the GU, and the EU. And you are seeing if DXY is buying, the USD pairs will be selling. So if you are seeing a buy setup on DXY and you are seeing a sell setup on the 4 USD pairs, you don't take the whole 4 USD pairs. It means if you go wrong, that means you are hitting stop loss 4 times in just one trade idea. That is not sustainable. That is not a responsible way of trading. So what you do is that you look out for the one that gives you a better risk to reward. You watch out for the one that gives you a better risk to reward, the one that helps you maximize the move the most. So if I go to AU and then my stop loss on AU is 21 pips, and then I go to GU, my stop loss on GU is 30 pips. I go to AU, my stop loss on AU is 15 pips. I go to NU, my stop loss on NU is 5 pips. It doesn't make sense for me to now go and pick GU that is 25 pips when I have AU that is 5 pips. Remember, the lot size I will use for 25 pips stop loss is not the same lot size I will use for 5 pips stop loss. So the 5 pips stop loss helps you to take good advantage of that move with a good lot size, having the same percentage to lose for the whole 4 asset classes. That's how to trade a profit account. It's something that you plan. We don't just enter trades anyhow. Okay, I'm seeing a buy setup on GXY. Okay, GU, EU, NU, AU, these 4 assets, what are they doing? Okay, they all have buy setups, but Kai, the stop loss on EU is smaller compared to the stop loss on GU. Nothing, you shouldn't go and take GU. Just focus on your EU. Take it with a good lot size, having the same risk. So if price goes against you, you are risking just 0.5% of that account. So at the end of the day, when they check your trading history, what they should be seeing is minus 0.5, minus 0.5, even when you hit stop loss, minus 0.5. So when they see minus 0.5 today, and tomorrow they see minus 2 and 3%, and next tomorrow they see minus 4%, you are not a good trader. You're not a good trader because there's no consistency in your losses. It simply means that you are not planning your trades. This is why most people fail prop firm accounts. There's no planning. They do so many things at the same time. Focus on one asset pairs. If you are not a USD pair trader, if you are a yen pair trader, focus on the JPY baskets. Use your yen basket to determine the directional bias of JPY pairs. You have your GJ, you have your EJ, you have your EJ, you have your AJ, you have your CAD JPY. So the same thing that happens for the USD pair. Look at the one that gives you a better risk to reward and take your trade. You don't buy that when you buy when you buy GJ, you are buying AJ, you are buying EJ, you are buying CAD JPY. The 4 of them will each stop loss at the same time. You are risking 2% of your account. That's not a good way to trade. Pick one. If you must pick more than one, don't pick more than 2. Don't pick more than 2. The third, do not take multiple trades in a day. It helps your mental state. So if you hit stop loss 4 times in a day, I think it's just better and wise for you to relax for the day. Close your laptop, go and do other things. 4 stop loss hits in a day is just minus 2% of your account if you are following this method I've given you. It's just minus 2% of your account. Close your laptop, go and do other things, take yourself out, go and play game, go and watch movie, go and read a book, go and refreshing your mind, take your mind from trading. Because he who lives to fight another day must have the strength and capacity to fight another day. You shouldn't risk all of your account today when market is misbehaving, only for you to simply move tomorrow and then you've lost the account already. It will be very, very painful. So minimize your trade numbers per day. Then the fourth, any trade setup that won't give you up to 1 to 3, don't take it. It's not worth risking your account, your mental stress and everything more. Whatever trade you are seeing that is not capable of giving you more than 1 to 3, or 1 to 3, don't stress yourself. Just let it go. Let it go. Let it go. There are other opportunities in the market. Let it go. Let it go. The fifth, treat all evaluation stages the same way. The same discipline you use to pass your stage 1 should be the same discipline you use to pass your stage 2. Don't say because stage 2 is 60 days, then you can be trading anyhow. Before you open your eyes and close it, it's 60 days already, and you are in deep drawdown. So the same discipline that was used to pass your stage 1 should be used to pass your stage 2, should be used to undo your life accounts. Simple as ABC. And the last, which is not the least, do not jump on trades. Whatever trades you've not been able to plan and think on, do not take it. It takes a lot of time. It takes a lot of thinking. It takes a lot of meditation to arrive at a trade decision. So if you've not passed through the process of planning, thinking, don't place any trade. Don't place any trade. Don't place trade because someone is telling you to place trade. If you are not too convinced to take a trade, don't take it. So even if you see a trade idea, check, is it in alignment with my checklist? If it's not in alignment with your checklist, there's no point wasting your 0.5% on that trade. Every amount counts. The idea of stage 1 and stage 2 is compounding. Every amount, every dollar you see in your stage 1 and stage 2 counts. You can't afford to be losing trades anyhow. You can't, you can't, you can't, you can't. So I believe if you take to these things, you will definitely pass through, scale through your stage 1, scale through your stage 2, and then get funded and still, keep withdrawing and withdrawing and withdrawing. Now, listen, let me tell you something. The goal of taking the Profem account is not to continue to trade the Profem account for life. You must understand this. You are just leveraging on the Profem accounts to be able to get enough funds to fund your own personal account. Because the amount you buy a $200 account is quite cheap. A $200 account on MFF is about 600,000 plus. If you take 600,000 now and then you fund your normal account, it won't give you up to $1,000. But now you are leveraging on the Profem. You give them $600,000, they give you $200,000 account. So the purpose of leveraging on that is not to stay there, it's not to plateau there. The goal is that you get enough funds from the profit split, and then you fund your personal account where you have access to 100% of the account. Remember, this account you are trading, you have access to only 12%, because once you violate drawdown of 12, overall drawdown of 12%, the account will be taken from you. So leverage on it while it lasts to take out funds from it and fund your own personal account where you have access to 100% of the amount funded. That's the goal. Don't keep withdrawing and enjoying life, and one day you just lose the account and you go back to zero level. No, it shouldn't be like that. So thank you very much for joining this session. Thank you for watching till this present time. If you've not subscribed, please subscribe. I also advise, please like the video. Take step. It's not enough to just watch this video. Take step. Take step. Get a Profem account. If you know you don't know how to do that, chat me up. I will lead you. I will connect it with people that can easily help you to get it done. Thank you very much once again for joining. Wishing you a super amazing trading experience. Cheers and God bless you.